Okay, we're going to get started. Thank you so much for joining us today for our Savings and Registered Accounts webinar. My name is Carla Giacomini. I'm Director of Marketing at Alterna, and I'm excited to be hosting this webinar today. Throughout the next hour, we're going to talk about savings and investing products and plans and tips and tools that can help you in your savings and investment journey. And before we dive right into the webinar, we're going to take care of a few things. One, just want to let everybody know that you're going to be in listen only mode, and that the webinar is being recorded so that we can, or all of members can view it at a later time. Also, we're going to be taking questions during the webinar, so please feel free to use the Q&A button and put your questions in there, and we'll get to as many as we can during the webinar. If we can't get to them all, we will actually take those questions and send out a follow-up email to you with the answers. Great. Now I want to introduce our speaker. Our speaker is Michael Borrelli. Very excited to have him here. If you attended our savings webinar a few weeks ago, you would know Michael. He's a passionate and innovative business professional. He's been working in the financial industry for over 22 years. He is very curious and a lifelong learner. So he has a deep understanding for the importance of building solid and trusting relationships. And outside of work, he is an avid soccer player and a coach to his two young daughters. So, very, very excited to have Michael here. Thanks for joining. Welcome, Michael.
Thank you. Thank you so much.
Okay, we're going to dive right into the webinar now. We're going to go through the agenda. We're going to talk about savings versus investments, the nuances there, investment and saving products, and then investment plans. And we're going to kick it off, kind of break the ice a bit with a poll. The poll will launch soon, and we want you to know that the poll's anonymous. So just answer truthfully because we have no idea of who's answering what. And so the first poll is to determine the most appropriate savings investing options. We should have a plan just like everything else, right? So you should know what you're saving and investing for. You should have a time horizon to reach your goals. And you should know what your risk tolerance is. So on the scale of 1 to 5, where 1 is you're really not there yet. That's number 1. And 5 is you've got a defined plan, and you have all of those questions answered, or maybe you're somewhere in between. So you can just click on one of the numbers and let us know kind of where you think you are in that financial planning scale. Okay, so I think we can show the results. Okay, so wow, a lot of 42% are in the middle, and that's probably where I am too. So I get you. But we do have some around 1 and 2, and we do have some around 4 and 5. So that's great. We've got a great cross section of people with different knowledge bases, and so I'm hoping that we can help you today. And if there are any other questions that we can't address, then please we can reach out to us for sure. So we're going to head right into it now, and Michael's going to start with savings versus investments, and tell us a little about that.
All right. Well, thanks, everyone. And thanks for joining me to learn a little bit more about savings and investing. Our last webinar focused on setting financial goals and budgeting for the future, and it's an important step to your financial success. If you missed the session, there is a recording listed on our website at alterna.ca. The focus of this webinar is centered around what you do once you have established a strong and consistent savings habit. There is a ton of information here, and it might go by pretty quickly. So I would always advise come and meet with us. There's a lot of details to go over. You've accumulated funds for both short, medium, and long-term financial goals, which is great. So now what? Does the money just sit there? Should I invest? What are the types of products? What is the benefit? Are there any drawbacks? So I'm hopefully going to answer these questions in the next hour and provide a clearer picture of what your next steps in that journey to financial stability and success looks like. So we already have the agenda, and here's a recap on this slide of examples of short and medium-term savings versus long-term savings. So when we look at holding money in a savings account, we need to consider the intended use. So if your financial goal is to purchase a car or take a vacation this year, a savings account may be the best option because you might need to use it in short order. The money is liquid, meaning it's accessible at any time. It may earn some interest, but very little, hence the low financial risk, which is what you want if you need to use the money right now. However, holding cash in a savings account can lead to deteriorating worth as inflation will eat into the value, meaning while your savings account remains intact, the price of a loaf of bread will be more expensive next year, devaluing your cash holdings right now. So when you have considered your future financial goals, such as retirement or your children's education, a long-term investment might be appropriate. There's a greater potential for capital gains and higher long-term returns. Again, this should only happen if you have considered your financial goals and how you prepare your overall finances. Let's go to the next slide. All right, so are you ready to invest? You have to first determine if you're ready. Consider your debt. So even in our last webinar, we talked about debt, saving for now, saving for later. And so do you have a plan in place to make your regular payments on your debts? Have you consulted with a financial expert to understand how to manage these obligations? That's the first part of it. The second is, and the second and third are kind of come hand in hand, do you have an emergency fund? And have you built up some savings? Do you feel confident that if an unexpected financial obligation comes about, will you have the means to support? And if you recall from our savings webinar last week, being financially successful means a balance of handling debt, saving for the present, so like a car or a vacation, and saving for the future. So to put it in simpler terms, if you have $100, don't put all of it in one category. 50% goes towards outstanding debt, 25% goes towards savings for now, and 25% goes to savings for the future. So, and the last point on this slide here is all about making your money work for you. And we'll get into that in the next few slides. Okay, so where to invest your savings? Registered versus non-registered. Sometimes we find that there's some confusion around this topic on when to invest into a registered plan or a non-registered product. Registered plans have been created by the government to help provide special tax benefits to Canadians when investing. Of course, there's specific rules and regulations surrounding these plans, which is why we always want to recommend meeting with one of our advisors to understand how these benefits can improve your financial outlook. A non-registered investment is simply an investment that does not have any tax benefits. Anything earned through these investments are taxed accordingly. So I'm hoping that makes sense, right? So, and then we're going to go through all the registered kind of plans, and non-registered is exactly that, just non-registered and ready to go. Next slide. So there are different registered plans, and it's important to understand each one of their benefits. What do they mean? How do I choose one? Which one is best for me? Everyone is in a different financial situation, with different impacts on their ability to invest. Even if you're struggling in today's economic environment, there are simple ways to provide you the peace of mind that the present and future will be stable. Let's start with one of the most important registered plans, the Registered Retirement Savings Plan, or the RRSP. So you guys are going to have a lot of questions over this. There's a lot of different angles on this stuff, but it's important to understand the basics of what and the basics and the benefits of an RSP. So, and it varies for everyone. An RSP is part of your long-term financial plan that can help you prepare for the future. In a nutshell, an RSP is a tax-deferred financial vehicle. When you contribute to an RSP, the tax is deferred. Not that you don't pay tax, you just don't pay tax right now on this money. And you pay tax on when you withdraw. And typically, that's when you retire. Instead of these funds being taxed at your current income level, monies placed in your RSP is not taxed until you withdraw. It also allows you to lower your current taxable income. Just to give you a quick example. So if you make $60,000 a year, you contribute $5,000 towards an RSP. Your taxable income is now $55,000, which is lower than the original $60,000. The $5,000 is not taxed until you withdraw, typically once you retire, where you'll be making less overall income. This is in its most simplest form, but there's a lot of different versions of this. Contribution room differs for everyone depending on pensions and how you file your taxes. I'm sure you had a lot of questions, and again, recommend sitting down with an advisor to assess that personal situation. Any unused contribution room can be carried forward, which means if you didn't contribute in years past, you can catch up in the years to come. There are a couple of instances where you can withdraw money without paying tax upfront. If you are a first-time home buyer, you can withdraw up to $35,000 tax-free out of your RSPs to use towards your down payment. You have to pay it back to your own RSP within 15 years, but it's a great benefit for all first-time home buyers. I highly recommend taking advantage of it. It's kind of like loaning yourself the money. And again, if you say, well, I don't have any money in my RSP, there are different options. You could take out a special low interest RSP loan, deposit it into the RSP, use your first time home buyer benefit to withdraw the funds to use towards your down payment. You have to pay back the loan. You also will have to pay back the RSP, but there is going to be a tax refund plus the benefit of now having an extra $35,000 towards your home purchase. And so I did this personally. I didn't have a total top up of my RSPs, but I took out a loan, put it into my RSP. I took it out. My wife did the same thing. And so all of a sudden we had an extra $70,000 on a down payment to use towards our purchase of our home. And I set everything up to pay back my loan, to pay back my RSP automatically. So I didn't have to worry about that piece of it that was built into my budget. But it really, really helped me to do to purchase that home and to put a little bit more down payment, less of a mortgage, so many good benefits to it. And sometimes it can be complicated, but we can break it down in its most simplest forms at the branch level for sure. Okay, but we'll move on to the next one. Tax-free savings account. So another registered plan that allows you to save or invest where all the gains you make is not taxable. It doesn't lower your taxable income like an RSP, right? But it's a good option to use for short and medium-term financial goals. So there's contribution limits and there's certain requirements around it and regulations. There's contribution limits. This year is 7,000, and there's an overall total amount that you're able to do up until this point. But I would encourage you to find out your own individual contribution limit through the CRA. So again, it's not that like the money has already been taxed. You put the money into a tax-free savings account and it can be invested in any way. We'll talk about that a little bit more. You put it into the tax-free savings account, anything you make on it. So if you have it in a savings account, you have it in a GIC, you have it in mutual funds, you have it in a stock, you have it in a bond, whatever you make on that is not going to be taxed. It's actually quite a slick product or service that the government has helped us with in order to save on the taxes for that.
Hey, Michael, we had one of our members, Lauren, is asking about, the RSP and your story about using
Oh, yeah.
it for, to withdraw on the home
Yeah.
buyers, first-time home buyers plan. And she's asking, like, does it apply to all income levels or just the people that qualify for the first-time home buyers plan?
Yeah, so for the people that qualify for the first time home buyers plan, so we would help to figure out whether you qualify. So for example, if you've never purchased a home, you're going to qualify for that. If you've purchased a home and then you sell it, and then you don't have a primary residence under your name for 5 years, and then in the 6th year you go to buy another house, you would qualify for a first-time home buyer as well.
So I
And
think
so,
also, yeah, I think Michael, she's saying she's thinking that there's a different income level. Like, are you qualified if you're making, let's say, a higher income versus a lower income,
yeah, of
right?
course, you can
Yeah,
still take out,
still
the
qualify.
maximum amount
Yes,
is 35,000 that you can take out for everybody.
for
So even
everybody.
if you make a whole bunch of more money or not enough money, in your opinion, you can still take out up to the 35,000. That's for
That's
everybody.
great.
Yeah.
Perfect. Amazing. Okay, great. We'll go to the next one.
All right.
Time home savings account. This is a new one just launched last year.
Yeah, so this one is a new one. We do have a specific webinar. I think Doug Carroll did that one, and it is also recorded and it's on our
It's
website,
no,
correct?
actually, sorry, Michael, just
Oh,
to be clear, the webinar for the first time savings account is on February the 8th at
oh,
3 p.m. with Doug Carroll. So it's upcoming. So if anybody is interested, you can absolutely register at on our webinars page at alterna.ca.
yeah.
So, and Doug Carroll will go in deep dive on this new plan.
Yeah, high level. I mean, this is a great thing. It is very new. It's designed for, again, first time home buyers. It does allow you to lower your taxable income, which is a huge benefit to Canadians. It's tax sheltered savings, non-taxable withdrawal. So you can put money into the first home savings account. It lowers your taxable income. You're able to take out those withdrawals without having any tax considerations, and you can put it towards your first home. You can transfer funds from your RSP to your FHSA without paying taxes. There's contribution limits. This is a new product that the government has helped us with because a lot of people are struggling to get a down payment and to collect funds for their first time home purchase. So this is another great option for us. Yes.
Great. Okay, we're going to go to our second poll. And again, just to remind everybody, the polls are anonymous, so we don't know who you are. I'm just trying to get a sense of where people are at. Our members, are you working with a financial investment planner? You can answer, the answers are there. No, like if people have the knowledge, then they create their own plan, let's say, or, they've worked with one once to kind of get them on the right track. And then there's those who actually work on a regular basis with a financial planner, maybe once a year, and review that with them. So just want to understand kind of where people are at. So we'll give a few seconds to fill that in. And I think you can launch it now, please, for the results. Okay, so this is interesting. Split down the middle. So a
Yeah.
lot of people that do it on their own, 31%. Some people that just need that one kind of help, with their plan, 37%, and 32% do that regularly. Okay, great. Thanks for sharing that with us.
I think
Okay,
that's
now,
an interest.
oh,
It's interesting
sorry.
that it's kind of,
Yep.
a third. Everybody is in a
Yep.
third, and it's kind of balanced across.
Hmm.
You've got to look at it like in the banking industry, there's a lot of experts that can help you with designing a financial plan that works best for you. Our role is to listen, understand, provide benefit and value to you, right? If we're not providing benefit and value, then we're not doing our job. And it's kind of like, I can work on my own car, which I have, but I'm not the expert. And so sometimes I do have questions about what part, what tool, how do you go about doing it? What's the process? There's a logistical way of doing things. And so it's similar to the financial. You could do it on your own, but every so often you need a checkup and you need validation that you're doing it correctly. And so that's why I think at least, every 6 months or once a year to come in and speak with somebody, right? So when you say, no, I feel I have the knowledge and time to create my own, that's great. But it's always good to get that second opinion by somebody who kind of works in it all the time.
Exactly. And actually, one of our members had a great point and wrote in saying that, hopeful she wished there was another option on the poll, as like that. I don't have a financial planner, but I don't also know enough on my own, right? So it's kind of I don't know what I don't know type of thing, right?
Yeah, of
So
course.
yeah, yeah,
But
yeah,
but
yeah.
again, we find that when people don't, or when people first meet with an advisor, there's a whole bunch of information that's shared with them that they might not have known about, right? And
Mhm.
in order to make good decisions, you need to be educated as much as possible. You need information is
Absolutely.
power, and you
Yeah,
need as much information to make those right decisions, right? Because ultimately it's up to you.
yeah, for
But
sure.
we can provide you that solid foundation. So going
Perfect.
into a registered
Actually, you know
retire.
what? Before you go into the RIFs, I just wanted to. There's someone that actually had a question, Michael, on the TFSA, which we just went through. So they're asking, can I transfer money from a TFSA to a term deposit without getting taxed?
Yes, of course. And so we're getting into it because we're going through the definition of each of these registered plans, right? And we're going into what, well, okay, non-registered, I'm going to put that aside. All the definitions of the registered plan. Within all of these registered plans, you can invest in any way. So exactly to a TFSA, when we say a savings account, that's just a very general term. That's just the title of a tax-free savings account. That also means it could be in a tax-free term or GIC. It could be a tax-free mutual fund, could be tax-free trading your own stocks, right? However you feel comfortable, and your time horizons, your risk tolerance, all of these different things come into play. But if it's sheltered in a tax-free account, it can be invested in any way. Does that
So
make
what you're saying is like I have a TFSA plan and
Yeah.
I can actually invest in a term deposit within my TFSA plan or within my RSP plan or what have you.
Correct. So as an example, if I'm planning a vacation, I don't know, not this summer coming, next summer, so
Mhm.
summer of 2025, I'm gonna have get a lump sum of money, put it into a tax-free, and I'm probably gonna take out a term, a 1-year term that's gonna give me a little bit more interest rate than holding it in just a
Yeah.
regular savings account. It's still housed in a tax-free, so whatever I make off of it, say I make $500 off of that, it's not gonna be taxed. It's all mine. If you didn't have it sheltered under a tax-free, that $500 interest income is good. The government is going to take about half of that. So call it
Yeah.
250 now is in your pocket. So it doesn't matter. It needs to just be sheltered in it. And that goes with an RSP as well.
Great. Okay, let's get on to
Yeah.
registered retirement income fund.
The registered retirement income fund is once you turn 71, your RSP needs to be converted. So your registered savings plan needs to be converted into this RRIF, so into a retirement income fund. Basically, what it's saying is the government is saying, okay, we've deferred this tax all these years. You've put money into your RSP. We've deferred the tax. Now we need to start taxing you. Now you need to actually are demanded to withdraw money out of there and start using it, and it gets taxed. The benefit here is when you retire, you're not making that larger income. You're making a much smaller income. That means a less of a tax bracket, less tax implications. So when you withdraw it, again, I'll use a number of 60,000. Now you're not making 60,000 as you were in your career. Now you may be making whatever, 25, 30,000. And you're going to be taxed when you withdraw on that tax bracket. So this is something that can be invested just like an RSP. So you'll have a lump sum. The government is going to demand an annual sum that comes out. There's still some left over. You can put that into any investment vehicle that you'd like. I hope that makes sense too.
Yep, that's great.
Okay.
And next one, registered education savings plans for
A
those who have
registered
children
education.
or grandchildren, right?
Yeah, children or
Yep.
grandchildren. This is an important one. I don't think enough Canadians take advantage of this. Basically, like when we had our two daughters, like in the hospital, we were already signing the paperwork to get this done because the
Same.
government, if you have a registered education savings plan, you can get up to 7,200 in grants from the government. for your child's education.
Free
Uh,
money, right?
yeah,
Take
it's free,
advantage.
it's free money. Everybody should be taking advantage. That's
Yep.
about a year's tuition, give or
Yep.
take. So that's important. You can invest in any way that you'd like for an RESP. You can contribute. Like it says, the government tops up your savings by providing a grant that matches 20% of your RESP contributions up to $500 a year. So you max out, what is that, $2,500 a year in your contributions. They give you 500. Do that every year until your child turns 15, I believe, and then you can reap the benefit of that. So I think this is an important one to consider. And again, if you have more questions, you should come in and talk to us about it. There are individual plans and family plans. For example, myself, I have two daughters. I opened up a family plan when my first daughter was born, knowing that I was going to have more kids, but opened up a family plan. So if the first child decides not to go to school, I can move those funds, no problem, right into the other child. And so there's different ways of looking at it, but the RESP, huge, in my opinion, to get that free money, free grant money.
Yep, I agree. I took advantage of that for sure as well.
Yeah.
So, yeah. Okay, and we're going to go to the registered disability savings plan for those who
So,
don't
and
know
this
it.
is another one that a lot of people are aware of. And so the RDSP is intended to help an individual who's approved to receive the disability tax credit to save for their long-term financial security. The contributions that you put in, they're not tax deductible, but the contributions that are withdrawn are not included as income to the beneficiary when paid out of an RDSP. The investment income earned in the plan is included in the beneficiary's income, but typically when you have the disability credit, it's a lower income. So this is a great thing to get into. My brother actually is part of that and gets a lot of benefit out of it. Again, it's something that we don't always do, so I encourage you to come into the branch and talk to somebody about that.
Yeah, and I guess I have a family member as well, and one of the things you have to think about is the contributions can only be made until you're 59 years old. So,
Right. Yeah,
yeah, so start early, right? That's kind of the
that's
key on
right.
this one. If it applies, start early, right? With a $200,000 lifetime limit and no annual limit for contributions. So,
And it's a great point, Carla, because with all of these types of registered
mhm,
products, right? An an RSP, an RESP, the RDSP, start early. And that was part of the
mhm.
budgeting and financial goals seminar, is start early. Doesn't have to be anything crazy. It could be $10, $15, $20. Just start. Make that part of the plan. Because if you think that, sometimes we see in the bank, people come in and they say, well, I'm 45 and I haven't started to save for my retirement. I need to do that now. Well, what kind of lifestyle would you like to live? Well, I'd like to go out on a couple of trips. I'd like to help support my kids and all these kinds of things. Blah, blah, blah. Okay, you're going to need to do $5,000 every 2 weeks. And it's not sustainable. You can't do that. But if you start when you first started working at 20, 21, 22, 23, 24, 25, then it's going to be much more manageable and digestible, right? So small chunks over a longer period of time is going to give you, the compound interest, and you're going to get a lot more benefit when you start early.
Agreed for sure. It's the key, right?
Yep.
Okay, now we're going to dive into, as you explained before,
Yeah,
those are all the plans. Now, these are the products that we can fit into those plans, right? So you
exactly.
take us
So
through all of this.
yeah, so again, you have I'll just use the RSP and
Yep.
TFSAs. Those are the two plans that, that I'm talking about. You can invest all these types in those two plans, right? So I'll actually not start with the first one. I'll start with the second one, GIC or terms. So this is typically for short term, 1, 2, 3 years. The benefit is that there's a guarantee interest rate that comes to you. So you have your guaranteed principal, guaranteed interest rate. Some of the drawbacks are it's a smaller interest rate typically. right? And so you might not get the huge gains of a mutual fund or a stock, but it's guaranteed minimum interest coming to you. Again, it's more of a short-term plan. When you get into, then I'll move back to the left to the mutual funds, and I'll kind of lump these all into mutual funds, stocks, and even EFTs. Those ones have the potential for a higher return. There's a little bit more risk involved. So that's why it has to be on a longer time horizon. And so you have the ability, if it's for RSPs and you're younger, and you're not retiring for another, whatever, 25, 30 years, you have the ability to take on a little bit more risk because you have time. If you don't have time, you should be taking as much risk, typically. Now, everybody's situation is a little bit different, but when it comes to my child's RESP or my RSP, I'm not realizing that for 10 to 15 years. I have the ability to go into a mutual fund. It could be a high risk, it could be a low risk. It really depends on when we do a deep dive into your financial situation, then we can make a better recommendation. You know, stocks in the middle there, you could do it yourself if you'd like. If you have the financial knowledge and expertise, you can trade stocks all within these registered products. So, we've seen some people who are very educated in the financial industry, in the financial markets. They start with a TFSA. They grow it so much because they understand the stock markets and how they're doing it, and they're not paying taxes on those returns. So that's some of the benefits there.
So how about for people like me, Michael, that don't know much about stocks? How do I invest in stocks then?
But then this is the whole
We
thing.
can,
There has to be a comfort level, Carla. Like
right,
if you say to me, I don't know anything about stocks and I'm risk adverse, I don't want to
right,
take risk. That's not for you.
right,
That's why
right,
an advisor needs to ask key questions to understand who you are, what you're all about, the type of person you are, right? Because if you're a
right.
peace of mind kind
Absolutely.
of person, you won't be able to handle the volatility.
No, I can't handle it for sure. But just to let everybody know as well, if people are interested in investing in stocks, we do have, Alterna Wealth. We have advisors that can handle that on your behalf. If you are interested, we've got advisors that can help you with stocks. So I could never do that myself. So I definitely need help with
Like
that
I
for sure.
dabbled because I still have a little bit of time until I retire, so I've dabbled in that a lot. I have a mixture. Diversification is also
Hmm.
important when you're looking at the overall picture. So at the bottom it says invest regularly and start early. So as we talked in the budgeting and financial goals webinar, it doesn't have to be a lot, but it has to be consistent. And it
Right.
has to start early. Don't wait until, I come in this huge cash windfall from the lottery to start thinking about my financial success. Start thinking about it as soon as possible, and it's never too late. You might be saying to yourself, "Oh, I haven't done any of this stuff." That's okay. Let's get going.
Yeah.
That's the most important part.
Okay, great. Anything else on investment products, or you wanted to share, Michael?
You know what? I think that's okay because investment products are really specific to everybody,
Hmm.
right? Like you said, and I'm the same, right? I'm a bit risk adverse.
Hmm.
So I have some GIC and terms, right? However, I also know I have time to see the markets fluctuate, right? And if
Right.
you look at an index chart over many, many, many years, right? If you only take a small sample size, you might be
Hmm.
like, oh, I'm going to lose my shirt. But if you
Right.
take a
A
long
long
sample
term
size,
approach. Yeah.
you can see that there's volatility, but it goes up. It still
Hmm.
goes up slowly. And so if you have the time, I can put some into, a little bit more volatile or a different types of
Hmm.
funds. So I
Hmm.
have a mixture of different things.
And it just goes back to that whole discussion about what's your risk tolerance, right? And knowing that, before you start choosing the investment products.
Yeah, and the other thing to consider too, and again, it's all about your comfort level and the way
Hmm.
that you want to communicate with us. You can do things virtually. It doesn't have to be necessarily in the branch, right?
Hmm.
My branch is at Bay and College, and sometimes it's difficult for people to come here, right? We can still do it virtually, right? Where we can still provide advice and get to know you and understand your situation where you don't have to come directly into the branch.
Yeah, that's amazing. It's so convenient for sure.
Mhm.
Okay, we're going to head into the savings products now. Just a few examples here.
Yeah, so the savings products that are included, there are higher interest savings accounts that can help you reach your goals, and it's easily accessible. And I think that's what a lot of people, if you're coming to me and saying, "Listen, Michael, I want to make as much as I can, but I have to use my money in 3 months," then we're
Mm.
going to recommend an investment savings account or a daily interest savings account. If, for example, you have money in, or you're thinking about putting more money or a lump sum into your RSP, but you're telling me that you're buying your home in 6 months, I'm not going to put it into anything locked in. I'm going to keep it in the daily interest savings account so that you're able then to withdraw it without any kind of problem, right? And then there's also redeemable term deposits, a 1 year redeemable where you can access your funds after 60 days, lower interest rate, but it's accessible. So there's so many different products. And I think, again, I go back to, in order for us to recommend the right type of product and service for you, we have to get to know you. We have to know who you are and what your financial goals are, what your budget looks like, so that we can give you the right advice. And that's why it's not just a cookie cutter for everyone. It really, truly is separate and individualized.
And so we have a couple of members asking. One is asking if they're would receive the recording. So yes, for sure. If somebody has to drop off, we are going to be emailing you the recording of the whole webinar so you can pick it up wherever you left it off.
Yeah.
We've got another member asking about the FHSA webinar on February the 8th. So if you can't make a webinar, you can just still register for the webinar. You will then be sent the recording the day after, so that you can, watch it at your leisure. So although you may not be available, just register with our webinar. Then you'll get a link with the recording, and you can watch it whenever you like. Okay. So that's on that. There's a couple of other questions that came
Sure.
in, Michael.
Yep.
One was on the that whole RSP to RIF. So Wayne is one of our members is asking, like general, how much do I have to withdraw per year? Because the government does have a percentage up to a maximum that you do have to withdraw, right, on a yearly basis when you've got a RIF, correct?
Yeah, there's a specific calculation that's made. I mean, I don't know it off the top of my head.
Yeah. And
You know,
I think it also depends on what your age is, right? When you
it matters your
right? Yeah.
age and how
Yeah.
much pension,
Right.
and there's a whole bunch of different things that are included in that.
Right.
Again, reach out to us, book that appointment. It could be half an hour, it could be an hour. Undivided attention is important, right? You don't want to get answers that are off the cuff, because then it might not be as accurate as you need it to be. When you spend that specific time with an advisor, then we can say, okay, we can use our calculators, our internal calculators, to understand what that annualized payment is going to be, right?
For the
Because again,
particular
it's gonna be
situation, right?
100%.
Yeah, the
Yep.
particular situation for sure. And like you said, the appointment doesn't have to be in branch. It could be a video
Yep.
chat, or it could even just be a phone call, right,
Exactly.
Michael?
That's
Yeah,
right.
yeah, yeah, yeah. No, that's great. Okay. And we've got another question. Not sure if you've got any predictions on these, but or thoughts on this. But Jim, one of our members, is asking about bonds and how do you see the bond market movement in the next few years?
Ooh, I mean, I would leave it to more the experts, in our
Yeah,
wealth team.
wealth team. Yeah,
There are so many variables that are happening right now in the world, right? And, supply chain, wars going on, it has a huge effect on what the financial markets are like, right? And so I would say I can definitely refer you. I don't want to misquote anything really,
yep.
but I would say I could refer you to somebody in particular and reach out to me, because at the end of this presentation, I think there's going to be a little QR code and my contact information as well. Reach out to me directly, and I'm going to set you up with the right person to give you more insight, because I have Ashton and Derek that can really give some good insight as to where we believe the bond market is going to be going.
That's great. Perfect.
Yeah.
A lot of questions like that too. People
Yeah.
are, trying to determine what's going to happen so that they can make the right information,
Yeah, I
right?
think I also
Yeah.
think though that we don't have the crystal ball, right? And nobody in the financial industry has the crystal ball. Otherwise, we wouldn't really need advisors. Exactly. It
Right.
comes down to all those questions around risk tolerance, time horizons, right? Diversification is also very important. Understanding your own personal situation, save regularly, start early, be consistent. These are some of the fundamental pillars that you need to consider, no matter what the situation is out there, is do you have your own plan in place and sticking with it, right? Because as an example, $20 every 2 weeks, every 2 weeks, every 2 weeks will add up. It's then what do you do with that going forward, right?
Okay, and we have another one on the RESP, sorry. A question from Jennifer's asking, is there an exact amount you have to contribute towards the RESP within a year before you get the 20% from the government?
Yeah, I think it was 20% up to a maximum of 500 per year, right?
Hmm.
So if you do 2,500, I'm just thinking about
It's
my own
back
personal
there.
situation. Yeah, if you're doing
Yep.
2,500 a year, then you get the maximum grant, right?
Right.
Of 500
Maximum
for that
500
year,
grand. Right.
for that year.
Right.
And then you
Exactly.
you would accumulate every year doing 2,500, 500 up to the 7,200 total. You can do more if you'd like. You can contribute more to the RESP, and it might be still a good idea in your own personal circumstance if you can, because it's going to be invested.
Hmm.
So you're going to be earning more income or interest on that, right? For me, really, I'm interested in getting the 7,200. So I'm going 2,500 every year. That's what I can do. I don't do any extra there, because I look at other investment vehicles that I can use, right? In like as an example, a TFSA, because I might want to go to Italy
Hmm.
next year, as an example,
Right.
right?
You spread
Um,
it around.
I spread it around,
Yeah.
and like I had mentioned in my previous webinar, I get paid, and then all my money is gone. So I get paid, and not gone like I spend it. Money goes the exact amount to my RESP, my RSP, my TFSA, to my savings account, all my bills. And so I'm left with only $400 or $500 every 2 weeks for my gas and some of my, entertainment and spending and food and stuff like that, right? So I'm always putting my money into different buckets, and I'm not neglecting that. Again, it doesn't have to be crazy, but like in amounts, could be $10, $10, $10. And you start. If you do better, you move up in your career, you make more money, increase those payments, because
Right.
you're creating a security blanket around you, so that if there is any challenges that you come into, we've had lots of challenges in our family as well, with when it comes to health concerns and larger bills and support of our family. And the only reason why a lot of us in my family are able to support each other is because we started early, we were consistent in our payments, and we diversified in different areas.
Yeah. And you never know what's coming next, so you have to do that for sure. Absolutely. Jim's asking, if you have a TFSA with one bank already, are
Uh,
you able to open another one with
yeah.
Alterna?
Good question. Yes. You can open up as many as you like, anywhere that you want, as long as you're within the contribution limits, right? And so that's important. So say, for example, I think the total amount is 96,000, I think we're at,
I think that's
over,
exactly the amount. Yes.
yeah,
Absolutely.
96,000 over the whole term. And you can
Right.
use all the unused room, right? So say you've never deposited anything, you can use that. if you had, for example, whatever, 90,000 at another institution, you could still open up an account with us and put in 6.
Mhm.
And yeah, so I think that answers that. Yeah.
Yeah, absolutely. That's great. Okay. We have a couple of people are looking for more information on bonds and ETFs.
Yep.
That's maybe something I don't know if you want to talk to now, Michael, or we can send out information about specific. We have some articles that we could, send out. So up to you if you want to expand on bonds and ETFs.
No, I would say I want to get the experts in front of you,
Yep.
right?
Okay.
Because it
Yep.
sounds like you got some very, very specific questions and you want specific answers. And I would lend you to some of our experts. So, Carla, hopefully we can capture their information, right?
Yep. Yeah, Sweeto. So it's Sweeto is one of our members. So maybe you
Okay.
can leave your information and we can get in touch with you so that we can specifically,
Yes.
address the questions that you've
Oh,
got
I
about
have some great
products.
people
Yeah.
here. I have some great people here who have a lot of knowledge, right? Because they have to go on course. They're always upgrading, right? Their education because it's not a standard kind of linear,
Hmm.
once you learn it, that's it. They're always going to courses. They're always doing, summits and seminars. And so I have 2 individuals that I would love to refer to you to have a great conversation about because these are the experts, right?
Perfect. Thanks, Michael.
Yeah.
Okay, so we did investment and savings products. Now we're just going to go to the value of financial advice. And I think you've talked a little about that for sure. And we do know that I think there's some studies, right, Michael, that say that, working with a financial advisor,
I think you'll be
helps you.
40% more, successful in your financial
Hmm.
journey than doing it on your own. Now, again, you could do it on your own. Again, you could fix your car on your own. But,
Right.
there's so many, there's a safety to consider. There's, the right types of parts, the right types of tools, the right way of going about
Hmm.
fixing your car, right? And so can you do it yourself? Of course you can. You could educate yourself too, but you might not get what you really want out of it, right? And so it's important to go to those experts, right? Financial advisors are specially trained, right? Some of them have great designations that they bring with them that they have to study. They have to, get the curriculum. They have to learn the curriculum. Then we have to go through supervisory periods where we have to watch how you give advice. What products and services are you recommending? Then you have to do upgrade levels and more courses and summits and sharing with other individuals to learn a little bit more. So that's why creating a plan by an advisor is important for me, especially if you're starting your journey so that you can get on the right track. And even if you're halfway through your journey or at the home stretch of your journey, there's always different ways, especially if you're going from working into retirement. There are so many tax
Hmm.
considerations that you need to think about that I'm not the expert at it myself. And I will go to my advisor to say, okay, how can I save on taxes here? Like, what's
Right.
the best
For sure.
plan, right? They put
Yeah.
together a nice little portfolio. They give it to you, right? You get to look it through. You don't have to make any decisions right on the spot. It's nothing like that. It's all about helping you. Like, we're successful if you're successful. That's the only way that this works.
Absolutely agree with you 100%. You can't be the expert on everything, right, Michael? You got to you got to talk to the experts sometimes.
That's exactly
Yeah.
right. Like when it comes
Yeah.
to the investment side of it, you got to go with the experts because a generalized view, you'll get a generalized result.
Right, right. And we all want to make more money, right? Off of our money. We work hard for our money. We want it to work for us. So okay, so we've put together some helpful online tools for you. So we've got a couple of QR codes here if you did want to You scan them. One is for calculators. Michael spoke about like retirement planning. He talked about our TFSAs, education savings, RIFs, and we have calculators for all of those. So again, if you want to poke around and try these calculators out, they're on our website at alterna.ca, a backslash calculator. You can also just scan this QR code and it'll take you right to the calculator page. You just choose the one that you're interested in looking at. Okay, so that's number one. We've got a ton of blog articles. So again, if you just go to alterna.ca backslash blog, you'll see there's a bunch of savings and investing articles. You can take a look at what interests you. Again, you can scan the QR code, it'll take you right to that page. Also, Michael mentioned planning and budgeting, which is the key to getting you into investing, right? Saving the money to get you to investing. So there is a budget planner through the Government of Canada. I've put the link down here for you to take advantage of it. So a really good calculator that you can use, a budget planning tool with the Government of Canada. So please take advantage of those. As we say, yes, working with a financial advisor is always a great thing, but it's also good to kind of take a look at and learn some new things and try to get use some of these tools to understand like what your financial situation is or what you have an idea of where you want to go.
And the one
So
thing I would say to that also, Carla, when it
yep,
comes to the articles, and
yes,
you go on our website, these articles have been, vetted and the blogs have
yes,
been vetted and stuff. I just, a word of caution when you're out there, researching on your own. You have to understand the source. Where is it coming from? And in this day and age, it's not like how it used to be where it was published. You had to go to the library, you had to get, go to, you know, um, recognizable sources.
right,
Now there's a
yes.
lot of fluff out there. There's a lot of quote unquote experts out there that can give you financial advice. I would be very weary about that because do they have the right designations? Number one. Number two, do they even have the right experience out there? Because you need experience, you need the designations, you need that education and background in order to give the right type of advice, not just any kind of influencer out there.
Right, right. Absolutely. So I agree with you 100%. You got to be careful these days what's on that web, right?
Mhm.
Okay, and we have some more questions, and also we've got Michael's information here, also the QR code. So if you do just want to book an appointment for a call or a virtual meeting or an in-person meeting, what have you, we're here to accommodate anything. You can just scan the QR code and book this appointment, or if you feel more comfortable, you can just email or call Michael directly. His information is here. However you want to reach us. We'd be more than happy to hear from you. There's a couple of members that
And I'll
put
just,
into the,
sorry,
oh, go
Kyle.
ahead.
I'll
Yeah,
just, I'll
sorry.
just mention, yes, you can do it any way you want. You can meet us we can do it over telephone. You could do a virtual one, but I like in person, right? Again, I'll just say, I use the car all the time because I find it's a good analogy, right? You can pick up the phone and talk to the mechanic and tell the mechanic what the problem is, what it sounds like, what it feels like, and the mechanic can give you a recommendation. But it's best that you bring the car in so I can see it. So
I
that's
agree.
why it's best that you come in, let us take a look under the hood so that we can give you the best recommendation in person.
Yeah. That's a good point for sure. Face to face always sometimes gives a little more, but for those who don't either have the time or the ability to get
Yep.
there in person, phone call or a video chat
Yeah.
works as well. There's a couple of members that are asking how to get to the webinar recordings. So I'm going to ask that we put that in the chat so you can grab it in the chat. They'll give you the link in the chat to the webinar page on alterna.ca. So you'd have the direct path to get there.
Yeah.
Okay, so we're almost, we've got a few more minutes left. I'll try to get to a few more questions, Michael.
Sure.
So this and you know what? My bad. This happened to me, so I understand this question 100%. What if I contribute more than my limit on a
Yes.
registered plan? So
Yes,
what
and
happens?
yeah, so I think RSPs, you're allowed to over contribute up to $2,000, right?
Yes.
After that, you're gonna, it's a considered an over contribution. You get taxed 1% for the overage per month.
Yeah,
So
it's
it's
painful.
one,
I know. It happened to me. It's
right.
painful.
And that also happens with the tax-free savings account as well. And so you'll get a
Right.
notice from the CRA saying you've over contributed. Actually, that happened to me too. There are ways, if there was a truly an error,
Hmm.
there are ways of correcting or sending information to the CRA to try to get it corrected. But I would say for the RSP, I know for sure it's 2,000.
Yes.
You're granted, but anything over that, be very, very careful. That's why it's important nowadays to have a My CRA account to sign up. You have to sign up right away though, because you get a PIN that's sent to you in the mail 10 business days later. So when you need something right now, um, it's good to be registered online to get that so that you can check what your contribution limits are for, or contribution room is left for your TFSA and your RSP.
Yep, that's great. Yeah. Another one as the RSP deadline for 2023 is looming on February 29th.
Yep.
We've got a question about, can I contribute now and deduct later? Let's say I don't. So if I contribute now and I don't need that RSP deduction limit for my, 2023 taxes. Let's say I don't need that. Can I do it later? Can I use it for maybe my 2024 tax
Yeah.
year or
Uh,
2025?
Yeah, of course. Like in the first 60 days of the year, you can determine if you want it for example, 2024,
Mhm.
or if you want it to be for 2023. So anything up to that February 29th deadline, that can be contributed to 2023. So that's why there's a bit of a rush. Sometimes people come in, they do their taxes with the accountant and say, well, this happened to me. So you do your taxes with your accountant and you're like, you're going to pay a lot of taxes. So you may want to consider contributing to your RSP to offset that tax balance right now.
Right, right. Great. One last question that we have before we have to sign off. This is on RESP.
Okay.
So it's, and I think you mentioned this, how to like decide what kind of plan to open, like individual or family, and then, can one child be the beneficiary of more than one RESP plan?
I think the beneficiary can only be for one RESP, and the decision between an individual or family typically is, if you're planning on having more kids, I would
Hmm.
say open up the family plan. The individual one is typically for the one child. I would have to dig a little bit deeper as to why you would only open up an individual plan, because again, that's only, for one child. But I will say also though that grandparents can be the subscribers, they can be the people that contribute and can open up for the grandkids as well.
And I think it can be a relative or friend as well. It doesn't have to be a family member, right? That can open a
Yep.
RSP for, yeah,
Yep.
yeah, which is great.
Mhm.
Okay, well, we're almost at the hour. Thank you so much for joining. Any questions that we didn't get to, we will get back to. Actually, there's just one last one. We got a minute. Well, one more.
Sure.
Jennifer is asking, can I withdraw from my TFSA and then recontribute that amount?
Right,
So
the
yeah,
next year, you can't do it the
do it the
same
same
year,
year.
so,
Yeah,
so you take out 5,000 this year out of your TFSA, that contribution, $5,000 room doesn't open up until the next year.
perfect,
So it's
perfect.
more, it's more of an account of, yeah, you can take out big, large lump sums. It's not an account where you go back and forth a bunch of times. I need $20. Let me go to my TFSA. No, that's not what that's for. That would be a regular savings account to have that
Mhm.
flexibility, right?
Yeah.
Mhm.
Okay, we're right at time, so I'm going to close it out. Thank you so much for all the amazing information, Michael. I've learned a few things too myself, so it's always good to join these sessions.
Thank you.
And I just want to remind everybody tomorrow you'll get an email from us, it with a survey link. It's a very short survey. We just would like to know, if there are other topics that we can share with you and what your interests are. So if you could take a couple of seconds to respond to the survey, that would be great. You'll also receive the link to the recorded webinar as well. So keep that in mind. And I just want to wish everybody a great rest of your day. I want to thank Michael again, and we'll see you again. Thank you.
Thanks,
Bye.
everyone.
Bye.